Welcome back to Momentum Trading, your go-to channel for mastering the markets. Today, we're breaking down the basics of crypto futures trading in just 1 minute. Let's start with the big question. What are crypto futures? Think of them as contracts where you agree to buy or sell a cryptocurrency at a set price in the future. But here's the twist. You're not owning the actual crypto, just trading based on its price movements. Now, how is this different from spot trading? In spot trading, you're buying or selling the actual cryptocurrency. With futures, it's all about speculation. You're betting on whether the price will rise or fall. Here's where it gets interesting. Going long means you think the price will go up. If you're bullish, this is your play. Going short means you're betting the price will drop. Perfect for bearish markets. Futures let you profit whether the market goes up or down. But here's the deal. Crypto futures can be high risk. The leverage involved means you could gain or lose a lot more than your initial investment. Always manage your risk wisely. That's it for today. Now you know the basics of crypto futures trading and the difference between spot, long, and short. If this helped, hit that like button, share with your trading friends, and subscribe to Momentum Trading for more quick tips to up your game. See you in the next one.